Hello students, in this video we will learn cash flow from operating activities. First of all, net profit before tax. In question you will find always net profit after tax. First of all, we will have to convert net profit after tax in net profit before tax. So how to convert? How to convert net profit after tax into net profit before tax? So net profit after tax, three items will be added back. Number one, transfer to reserve. Second point, transfer to reserve means if any amount is transferred to reserve out of profit, that will be added back to the net profit. If any dividend is paid to the shareholder, that dividend will be added back to the net profit. And third item is provision for tax. Suppose any provision is made for the tax, that will be added back to the net profit. After adding these three items to the net profit after tax, we will be able to find net profit before tax. So our first step is calculation of net profit before tax. Now, how to calculate cash flow from operating activities? Cash flow from operating activities will be calculated in two steps. First of all, in first step, we have to find out our operating profit. After calculation of operating profit, we have to adjust current assets and current liabilities. That means we have to give effect of our current assets and current liabilities on operating profit. After adjusting current assets and current liabilities, we will be able to find out cash flow from operating activity. So there are two steps to find out cash flow from operating activity. So let us understand net profit before tax. Now we have to convert this profit into operating profit. So we have to make some adjustments. Non-cash and non-operating expenses. Non-cash and non-operating expenses we have to add back. So first point, depreciation on fixed assets. It is a non-cash expense. That's why we are adding this point in the net profit to find out operating profit. Second one is intangible assets written off. For example, goodwill written off, loss on sale of fixed assets, interest paid on long-term liabilities. These three are non-operating expenses. Provision made during the year, provision for doubtful debts, provision for legal charges, these are all non-cash expenses. Bad debts written off, this is also non-cash expense. Because of these expenses, the profit is reduced, but the cash is not going somewhere. Cash is same. So these are known as non-cash expenses. So that's why we have added these six items to find out the operating profits. Less non-operating income, gain on sale of fixed assets, it is a non-operating income, and other incomes, rent received, interest received, and dividend received. So here is operating profit before working capital changes. Now we have to adjust current assets and current liabilities. If the current assets are decreasing, that means we have sold our current assets, or you can say that cash is coming. So we will add these items when assets are decreasing. And if the assets are increasing, if the current assets are increasing, that means we have purchased some current assets. Cash is going out, that means. it is a outflow for the business. So we will deduct it. On the other hand, current liabilities, if the current liabilities are increasing, that means cash is coming. So we will add them. And if the current liability are decreasing, that means we are making payment of current liabilities. Cash is going out. That's why decreasing of current liability will be reduced from the operating profit. After adjusting current assets and current liabilities, we will be able to find cash flow from operating activities. Last item, less income tax paid during the year, if any. If any income tax is paid, deducted from cash flow from operating activities, and the net cash generated from operating activity we will be able to find. Thank you.